So in this video, I will interview WidePoint CEO Jin Kang. WidePoint is a cybersecurity company that I believe is definitely worth keeping on our watch list. Today, its market cap stands at around $30 million only, making it a microcap, right? But don't be fooled, because this company already works with huge clients, with huge names, as you will soon see. Anyway, I hope you enjoyed this interview. It was a very interesting chat. Unfortunately, I had a few audio issues, but nothing too serious too. Before we begin, though, as always, nothing in this video is investment advice, okay? So, Jin, can you tell us a little bit about your background? How did you get to WidePoint?
Yeah, so a little bit about myself. I mean, I'm a technologist by education and training. I got a CS computer science degree from University of Maryland and a master's degree. Started my business doing federal government contracting, software development, software integration. And while I was doing that, we developed an application to help our customers manage their mobility assets by providing security, manageability, and visibility into their mobility assets. I've been through several successful M&A and exits, and back in 2008, that's when I joined WidePoint Corporation. That's when my company that I started was sold. I sold the company to WidePoint in 2008, and I was pretty happy with the deal. It was my third successful exit on that. I had a 3-year earnout, which I hit most of my targets on the earnout targets. And so fast forward a few years, and now we're into 2017. The company was struggling, mightily, and the company that I sold to WidePoint had now become something like 75% of the whole organization. The largest shareholder at the time, a company called Nokomis Capital, wanted to effect a management change and a board change, which they did. That put me as the CEO. They appointed me as CEO. I formed a team at the time of our COO, our CSMO at the time, and CFO. We took the helm at the second half of 2017, and we have been 31 consecutive quarters of positive EBITDA, now 6 consecutive quarters of positive free cash flow. The management team and myself, we are all operators, and we know how to operate a business and grow the business and do it, profitably. And so we stabilized the company, and now we're continuing to add cash to our balance sheet. Did a couple of small tuck-ins, but we're still, at the point where we're fortifying our balance sheet. We're continuing to add cash to our, balance sheet.
Okay, and are you a major shareholder of the company? Can you say what percentage of the company you own today? Have you been buying any shares recently in the market?
Yeah, thank you for that. And the answer is yes. I do own shares of WidePoint Company. When I joined WidePoint, when I sold my company to WidePoint in 2008, I took a fairly large portion of that selling price in WidePoint stock. I think at the time, reverse split, I think it was something like 3 million shares, which equates to about 300,000 shares today. To date, I have approximately 6.5% of the current float, which is 9.7 million shares. So I have roughly 650,000 shares, 660 and change, somewhere around there, 6.5%. I have been buying shares out in the open market over the past 10 years. Even prior to that, I was also an acquirer. I haven't sold a single share, and I continue to hold, and I feel that in the long term, I'm gonna do well because of that. Me and the management team, we own roughly 14%, almost 15%. include the board of directors, and we're probably up to like maybe 18, 19%. So insiders, our objectives are very well aligned with our investors.
Okay, so we have a lot of skin in the game here, right? Um, and
Yeah.
what exactly does WidePoint do? What problem are you solving?
Yeah. So we're the leading provider of mobility as a service. And the problem that we solve is the need for our customers to secure, manage, and gain visibility into their mobility assets. We are now in this post-pandemic environment where people are still working from remote locations. And, we have now hybrid, work environments. And it becomes more and more important to continue to be able to provide that security and manageability for our customers' mobility assets, right? We have the most secure multi-factor authentication solution available on the market. Essentially, it's an identity management solution that allows our clients to connect to their IT infrastructure in the most secure way possible, right? Our identity management solution is what we call quantum computing resistant. It is a solution that has been implemented in all of the federal government, including the Department of Defense, federal government of the United States, right? It's been recently FedRAMP certified or FedRAMP authorized. And so we have a solution that is most secure solution that is available on the market. And if you give me a couple of seconds here, I'm going to try to put my phone on silent so that we won't be disturbed here. Okay, there we go. And so, as I said, we have the most secure multi-factor authentication solution that is available on the market, coupled with a built from the ground up mobility management solution software, what we call the Intelligent Technology Management System. And this system allows us to provide full 360-degree support services for our customers' mobility needs, right from the time that our customers acquire the assets like smartphones, tablets, and notebooks, even desktops, and then managing all of the associated costs and the technical challenges that's involved in managing these mobile assets, including auditing the invoices, data voice services, helping our customer negotiate contracts, program management, policy management, mobile device management, mobile application management. So we built this application from the ground up to specifically address those issues. And our ITMS solution has recently now, this would be March of this year, 2025, has been now FedRAMP authorized. And what that means is that our system...
I was going to ask that. What does that mean? And can you give me a concrete example of how your technology is applied?
Yes. So FedRAMP authorized means Federal Risk Authorization and Management Program. And what that means is that we meet all of the federal government's requirements for cybersecurity. And we have, it took us roughly 3 years to gain that authorization status. And what that means, as I said, is meets all of the federal government's standards for cybersecurity standards for data protection, for whether it's data at rest or data in motion. And what that means is the federal government customers can trust our system to be, the most secure application that is available on the market. Now, what we're doing is we're taking that level of security and providing that to our commercial customers, right? And so, if you would store any kind of customer data, you have to go through this process to make sure that you get the authorization from our federal government, United States federal government, to be able to store sensitive data. And we got that approval from the federal government in March of this year.
And it took 3 years to get that approval, that certification.
Mm-hmm. It took us, almost 3 years to get that certification, and we're only, the only company that I know that is in the mobility as a service market. We're the only vendor that has the FedRAMP authorized status. Our competitors are in the various stages of completion. And what that means for us is that as the federal government goes out and look for vendors to be able to provide this service, they'll put out a request for quote or request for proposal. And in that proposal, they will specify that, the vendor must be FedRAMP authorized. And so far as we know it, we're the only vendor that has that capability, that certification. The reason why that is also important is that there is an upcoming recompete for our CWMS, Cellular Wireless Management Services contract, which is now in the third iteration. And in that solicitation, in the draft solicitation, they specifically list FedRAMP authorized as a requirement, and which means that it will be very difficult for our customers, our competitors, to be able to wrestle that work away from us. I'm not saying that it's impossible, but it makes it very difficult for them to win that contract away from us. The CWMS contract is a $3 billion, 10-year contract for the Department of Homeland Security to manage everything from soup to nuts for their cellular, wireless, and mobility services.
Okay, so lots of things here. But first thing, can you give me a concrete example of how your technology is applied so it gets really clear for our listeners what you guys do?
Sure. So in terms of our identity and access management, I will tell you the way that works is that we will vet an individual and we'll issue them an identity credential. Right now, the identity credentials are placed onto these, secure smart cards. I don't know if you're recording this in terms of the video portion of it, but what it does is right now, the federal government uses this identity card, which has a very secure smart chip on it. They use that currently for issuing credentials to their government employees. If you've been to any, federal government installation or even the airports, you'll see these folks, federal government employees, carrying around these badges. Again, this is the most secure multi-factor authentication solution available on the market. It has all of that information stored, the identity information stored, and it acts as physical and logical access token. Now, what we have done successfully is to place that same level of security onto your mobile device, right? And so instead of now carrying around a badge, you will carry around your mobile device as your physical and logical access token, right? And so when you are answering your emails, you would use your phone and you would sign your email, or you can encrypt your email. And it is based upon the public and private key, or the PKI infrastructure. And you use that as your logical and physical token. So that's our identity management solution. Now, our mobility management solution, and the reason why that's important is that we manage more of these devices for the federal government than anybody else. And so what we're able to do now is that we're able to put the most secure multi-factor authentication digital certificate onto the mobile device. And we can roll those, and essentially we're deriving the digital certificate, identity certificate, from the card that the customers already have, and we're putting that onto the mobile device. And because we have our ITMS, and because we have the technology to be able to now derive a certificate from their ID cards and put them onto the mobile device. And so, as far as we know, we are the first to be able to do that onto the mobile device in the most secure way possible. The way we do it is that we generate the digital certificate on the mobile device. We don't generate it on a server somewhere else and then transfer it over the air into the phone, right? We generate the certificate right there on the mobile device, making it the most secure, security token, possible. Okay, so that's That's our identity management and our mobility management solution. So again, on our mobility management side, we have again, purpose-built from the ground up, our ITMS, Intelligent Technology Management Solution, that takes care of every facet of managing this device and providing visibility. How, where is this device? Who is it allocated to? How is it being used? What's the contract rate? What's the policy on that device? After, is there a renewal date? Is there a tech refresh date? And we provide that all of the logistics, all of the management of this device right from our purpose-built application called Intelligent Technology Management System, one that has now received FedRAMP authorized status from the federal government, right? And now what we're also rolling out our device as a service. So if you can imagine, like a large, Fortune 100 company wants to pay a regular monthly fee for providing the device, all of our managed services, security, identity, access management, recycling services, all of those services on a, essentially for a monthly fee of, X dollars, let's say $25, $30 a month. And we take care of everything from soup to nuts for that customer for their mobility management. Make sense? All right, so that's our device as a service solution.
Totally. And how is your business structured? I mean, what are your business line? Are you a SaaS business? Do you have a SaaS business? I know that you are a device as a service business. Can you explain me a little about that?
Yeah, so we are moving to an as a service business model, and so we're providing, for example, our SaaS model for our mobility management solution is that ITMS, we license that product to our customer, and we charge on a per unit management fee, right? And so the license associated with the ITMS, we charge our customer for that, and we operate that, the ITMS on behalf of our customer, utilizing those licenses. So, and the licenses are based upon the number of device managed. Make sense? And all of our solutions like device as a service is per device or per user being managed. Our IT as a service, which is we help our customers manage all of their IT infrastructure, and we provide that service as a service, or IT as a service, 360-degree coverage of all of our customers' IT infrastructure needs. And so because we are managing our customers' IT infrastructure, what we're now able to do is to help them implement their mobility management. As they're logging into our IT infrastructure, this becomes your password token. This becomes your security token to gain access to your physical and logical access, right? And so you would put this next to your computer. You would log into your email, your HR files, your inventory files, all of those systems. You can log in using your security token, which is now your smartphone.
And Jin, how much have you invested? How much has WidePoint invested on creating this technology? Do you have any idea of that?
Well, we've in the millions of dollars, tens of millions of dollars over time. I mean, when we first started developing ITMS, this would have been back in 2006, and so over that time, we would probably have invested at least $1 or $2 million a year since that time. So if you count between 2008 till 2025, we're talking 14 years, right? Roughly, right? And so if you multiply 2 million times 14, that's probably about the amount of money that we have invested in this, just on keeping up and doing the enhancements. But the initial investment into building this thing was probably on the order of $5 to $10 million.
So, in a certain way, if you bought this company today, if you bought its shares, its market cap is more or less what the company has invested on its technology, right?
Oh, yeah. I mean, that's kind of, as at our current market cap, we're about at $30 million. We probably invested more than that just in, just the development of the software. And so, yeah, I think that, we're, just mentioning that is that we're, undervalued in my opinion.
Um, so lots of questions. And how do you've already answered that partially, but I'm gonna ask that anyway. How do you differentiate yourself from your competitors? I know that you've already have the FedRAMP authorization.
FedRAMP authorized, yeah.
That's already a big advantage. But can you give me some more color about your differentiation in relation to your competitors?
Yeah, so we have an application, as I said, built from the ground up specifically to manage our customers' mobility needs. A lot of our, competitors have used, third-party applications to retrofit the requirements into like an inventory management system that they use to create the mobility management their application. They also have used customers, CRMs in order to build this application. So what they're doing is they're taking a third-party application that is built for general purpose and they're customizing it to fit their purposes. But what we have done is we have built an application specifically to manage the way our customer manage their mobility assets. And the big differentiator is that we don't have to redevelop every time that a customer needs to change their policies or their procedures. What we do is we just go in and we configure our software to be able to do that. And we have some 3,000 configurable settings to be able to match the workflow of our customers. Right. The other differentiator is that we have excellent past performance. We're great at delivering. We're great at delivering the services that we promise to deliver. I don't know how familiar you are with the federal government contracting. There is a federal government contracting CPARS. It's the contractors performance reporting system, right? CPARS. And essentially what that does is every organization that has a contract with the federal government gets a rating. And we have excellent rating on all of our, contracts that we have been working with the federal government. And, that's a huge differentiator when it comes to vying for contracts with large organizations and especially the federal government.
So I see that you work with some very big names, especially in the government side. Do you also work with companies with the corporate world?
Absolutely. Right now we're working with our partner CDW. We're also working with the likes of Raytheon. We're working with the likes of TD SYNNEX. These large systems integrators, SAIC, Leidos, IBM, Samsung. And we're working with all of these, partners to help us, provide the same level of service to their customers. So we're leveraging their customer relationship. We're leveraging their sales and marketing resources, and especially their customer network. Right? They have a very extensive customer network, and we're leveraging that to provide our services to their existing customers. And so that's been very effective for us because it allows us to leverage their sales and marketing resources.
Can you name some of your clients? Can you give just for me to have an idea of how big are your clients? Are the names you work with?
Right. So some of the customers that we have, we're talking the likes of Department of Homeland Security, one of the largest organizations, in the federal government. And we also work with Department of Justice. We work with the Department of Defense. We work with the Department of Commerce on the largest mobility project called the Decennial Census. So every 10 years, the Census Department have to go out and do a decennial census. And as part of that, we had rolled out some 700,000 devices. And we did all of the logistics, reverse logistics, configuring the devices and bringing all of those things back without losing a single device during the pandemic. We also have customers like the Liberty Bottling, which is related to Coca-Cola. McDonald's is another one of our customers. Southwest is another one of our customers. American Airlines, Lockheed Martin. And so, these are fairly large organizations, both public and private.
And how hard is to land these clients?
And I would be lying if I said that they were very easy. It's a very long, sales cycle. But once we have them, our services are very sticky. We have, something like above 95% renewal rate. These large organizations, whether they're public or private, they have a very long, very standardized acquisition process, and they go through. They have very stringent process, and they have to entertain so many quotes from so many vendors, and they put out very stringent requests for proposal, and we have to reply to them. And sometimes this process will take a year and a half, 2 year plus. And so it's very important for us to make sure that we have various opportunities in various stages. So some we're in the pre-proposal process or pre-RFP process, and so we track all of these opportunities right up until we close on them. So we have various opportunities in various stages to make sure that we're continuing to push opportunities into our sales funnel to make sure that as the funnel gets smaller, we get the results we need at the end of that funnel process.
Okay, coming back to your current market cap, your market cap stands at I think 30 million. Would you say your clients alone could be worth half your market cap or your entire market cap? Because the way I see it, those clients have a lot of value. Sometimes, the way I see it, depending on the price, it's worth acquiring a company just for the client base and the contracts it has. Am I thinking the right way? Could I say that your clients could be worth like 15 million?
Oh, minimally, right? And so just the client list that we're talking about, if we just talk one client, which is the Department of Homeland Security, that's a $754 million customer. And that's over a 5-year period. So if you divide that by 5, we're talking, it's a fairly sizable customer, right? And then now what's going to happen with this customer is that $750 million contract is going to expand into a 10-year contract that's worth $3 billion. They're not multiplying the 750 times 2 because it's a 5-year contract at 750. If you multiply it by 2, you would say that's only 1.5 billion. Well, they're going to be adding additional scope of work onto that, and that's why they're going from a 750 million 5-year contract to a $3 billion 10-year contract. So just that contract alone would be worth, a large sum, right? So if you divide, $3 billion by 10, we're talking $30 billion, right, per year, right? And so that's a good amount. Am I doing my math correctly? Let's see, 300 times 10 is 3 billion. So that could be worth an annual revenue of $300 million. So just that customer alone is in my opinion, would be worth a lot more than $30 million in market cap. We have other larger.
Only this client has the potential to generate WidePoint 300 million in revenue. That's what you were saying, me?
Per year, yes. Yeah, just that one customer, right?
And
right now.
And what's your? I'm sorry to interrupt you.
No.
What's your? what's your total revenue potential? What's your total addressable market with the clients you already have?
We're talking somewhere in the $26 billion addressable market. And this is in the mobility management, and this is in, and I have to go back and refresh that the data, because that data, the $26 billion market cap, was based upon numbers from like 2022. And so I think that our market is continuing to grow as we continue to navigate this post-COVID environment, and more people are working remotely. And so I think that market is going to continue to grow. We're in the right place at the right time with the right set of solutions. And so we've been experiencing double-digit percentage growth over the past 10 years, right? And since 2017. And we've been continuing to experience that. And I think the market is going to continue to grow. For us, because we are a small company, any incremental increase is going to mean a lot more to us in terms of percentage-wise. If we are able to re-win the CWMS contract, we could potentially double our revenue run rate. Our revenue at the end of 2024 was $142 million. Just the DHS alone, if it's actually implemented at $3 billion, our run rate just for that contract alone could be $300 million. So that doubles our top line revenue.
Okay, so lots of questions here. I actually don't even know where to begin. Okay, first question. How much of your total revenue is recurring? All of it?
All pretty much, like 90% plus is recurring revenue. And for total transparency, I do need to tell you that $300 million revenue, approximately, let's say 75%, let's say 80% of that is pass-through revenue, zero fee, right? So even if it's at 80%, and let's say 20% is the higher margin stuff, so that's still $60 million a year, right, for that one customer.
Okay, and talking about your margin, you have a gross margin of around 10 to 13%, if I'm not mistaken.
Right.
Why is your margin so low, and how do you see it over the long run? Do you see it expanding, and why? How much operating leverage does your business have?
Great question. So our gross margins for all of our revenue, if you include the pass-through that I just spoke of, 80% is zero services, zero fee, zero profitability. If you include that, we're at like a 12 or 13%. But if you exclude that, if you exclude the carrier services revenue that I'm talking about, is our gross margins are somewhere north of mid-30s, between 35 and 40. For Q1, we were at 40% gross margins. And so if you can now just ignore the carrier services piece of it, at $60 million for that one particular customer at 40% gross margins, I think that you start seeing the leverage. And so as we add on these new customers, as we grow our SaaS revenues, you'll see that our gross margins will continue to tick up. Our goal is to get that to like 50%, and our bottom line profitability will also improve.
This business division, the carriage, service.
Mm-hmm. Carrier services.
Carrier services. Why is it? Why does it have a? Why is it? Oh my God! Why is it not profitable?
That's a great question.
Why is it not
great
profitable?
question. Great question.
And why are you offering it if it's not profitable?
Right. So that's a great question. And so this carrier services, essentially what it is that it's WidePoint paying for our customers' phone charges, data and voice. And we only do that for the Department of Homeland Security. We don't do it for anybody else. And so all of our revenues are, SaaS type revenues, except for Department of Homeland Security. Department of Homeland Security is providing us, let's say in this future project, $60 million of SaaS revenue. On top of that, you would add on $140 million of carrier services, right? And so the carrier services is essentially WidePoint paying for the invoices that Verizon, T-Mobile, AT&T charges DHS. We look at the invoices. We look at that as part of our managed services. We look at it, we audit it, we review all of the invoices and say, Mr. DHS, you owe AT&T X dollars. And they say, okay, we're going to give you X dollars. Now you pay AT&T, right? And so that invoice payment part is what is the zero profit business. And DHS saying, I don't want to pay 100 carriers, AT&T, T-Mobile, that will have multiple accounts. And all they want to do is to write a single check to WidePoint, and WidePoint break out the payments for all of these carriers. They're local carriers, they're international carriers. We're talking in the orders of hundreds of carriers and hundreds of invoices that they would have to pay separately. And so, for their convenience, they're saying, we're going to pay you $60 million a year for the managed services, and you pay our invoices. And so that's the carrier services piece.
Okay, but I didn't understand why you offer it. Is it because it is a form to attract clients and to service and to offer other types of services and products? Is it a form of attract clients to cross-sell other things?
Yes. And so the carrier services piece of it comes with the $60 million worth of high margin revenue. So it's an opportunity for us to be able to say, okay, we will do this for you as a convenience factor for DHS. And in order to get the managed services or the SaaS revenue, you have to do the carrier services. And so the answer is, we wish we didn't have to do it, but we're not going to turn down higher margin, large, SaaS revenue by, because it's going to water down our margins, right? And so, it's a convenience factor for DHS. And as I said, they're the only customer that we do this for. And we discourage other customers. We say, look, we will give you all of the invoice, reference and recommendations on what to pay, how much to pay, and we'll give you a thorough analysis, but you actually have to pay them. And so we don't actually have to declare that as revenue.
I'm sorry for my ignorance, but what is DHS?
Department of Homeland Security. Sorry about that.
Of course.
Yeah, and everybody knows Department of Homeland Security. And so, I take it for granted that, everybody, because it's in the news every day. And, so sorry about that.
No problem. And most of your new revenue coming in, most of this huge revenue potential that might come in, is it high margin? Is it a high margin service? Should we expect WidePoint's gross margin to continue expanding? How should we think about that?
Yeah, so we are targeting, again, all of our SaaS revenues and managed services revenues are targeting higher margin commercial customers. We're also we are trying to avoid not to do the carrier services piece. And as I said, the only customer that we do that for is the Department of Homeland Security. And so we've been successful in, fending off the carrier services revenue. So we should see our gross margin continue to improve as we continue to lock down, larger pieces SaaS revenue. And we have a lot of opportunities in our device as a service opportunities, and these are all commercial, Fortune, 100 companies, very large staff footprint, and we should see our margins continue to improve as we lock down these additional customers.
Okay, so for those who are not investing in WidePoint because of its low margins, that could drastically change, right?
Oh, that drastically change, I believe. And again, we've been very transparent about our types of revenue, and so when our investors, our potential investors, look at us, they should look at us as, just subtract the carrier services revenue, which we identify the two lines of revenue in all of our filings, and we cover it on every one of our earnings calls. And so you can look at us as a $60 million a high margin revenue, and we're talking at 40% gross revenues, right? And so with gross margins, and so you should look at us that way, and always look at just discount, just ignore the carrier services revenue piece of it, and then you will see our gross margins are pretty good, and we're continuing to improve that. As I said, we're looking at improving that to north of 50%. And so when we do that, you'll see our bottom line profitability improve, and we should make a lot of progress towards that in 2025 and 2026.
Okay, so that's already on its way, right?
Yes, right. And you will see continuous improvement on that.
Okay, and do you see WidePoint becoming, for instance, a $1 billion market cap company? What would be the case for it?
If we would become a $1 billion market cap company, I think as we lock down, we have a lot of opportunities in our sales pipeline for our device as a service. That's number one. Number two is our mobile anchor application, which is again putting our digital certificates on the mobile device, and we're able to roll out that solution to all, whether it's a smartphone, tablets, desktops, notebooks, and roll it out into Internet of Things, right? All of the lampposts, signal lights, walk, don't walk signs, all of these things as a part of the Smart City initiative, that could be a huge opportunity, and that could propel us to the $1 billion market cap.
So that wouldn't be unimaginable, right?
Oh, it's definitely it's definitely imaginable, and I think it's definitely possible. I think that there's a lot of opportunities there. Again, that the multi-factor authentication solution that is quantum computing resistant, that is essentially implemented in all of the federal government agencies. We're rolling that out to our customers in the commercial sector, and in all of these utility sectors, and potentially you can use that our mobile anchor solution and our derived certificate solution to be sort of a universal identification model, so that instead of carrying around a card for your driver's license, you can have that on your mobile device, and that is secure with the most secure multi-factor authentication solution available on the market. And so if we are able to capture that market, maybe for a particular U.S. state, or all of the countries, or maybe even talking about replacing the Social Security card, have a universal ID, voter ID, voter registration. I mean, the uses are endless, right? And so, if we can make good progress, $1 billion, I think, is easily imaginable. We're also working with some foreign entities to be able to issue that type of level of identity management solution to other countries. And so a lot of things happening, a lot of exciting things with our identity management solution and our mobility management solution.
Okay. And again, sorry for my ignorance. And how, you install some kind of technology in people's and companies' devices. How does that work? Do companies send their phones to you and you do that manually? How does that work?
Yeah.
Is it a software?
Yeah, so it is a software solution, it's software as a service. And so the way it works is that when we issue a digital certificate, an identity, I'm going to just work on the identity, personally, what they call PIV, personal identification verification certificates. The person has to provide, identification and information like a passport, a driver's license, government issued. Once we review all of that, and we can do this in a remote vetting, once we do that, we can then issue them a digital certificate. And when we issue them a digital certificate, it is generated on the mobile device. We don't have to have the phone, in our possession. They can have the phone, and we can program that over the air, right? And so we will actually send the commands onto the mobile device to generate a digital certificate on the device. And we do the device key generation synchronously versus asynchronously. Synchronous key generation is much more secure, and we have the proper algorithm to be able to generate these keys on the device while at the same time generating the same key on our servers, right? And so the keys are never sent, over the air, right? The keys are generated in the locations where they'll be stored. And so that key will be generated on the mobile device, and we have the capability to do that. And it is stored on a secure location on your Droid devices and your iPhones, right? On the iOS, it's stored in what they call the secure enclave. It's a physical location on the mobile device. And on the Droid device, they have what they call a TPM chip, the Trusted Platform Module. And also on notebooks and laptops, you can issue those digital certificates onto those, again, generating the keys on the device and not, generating the keys on your server and then sending them over the air to the device. And so that's the software we're talking about.
Okay. Okay, great. So WidePoint is a cybersecurity company, and the way I see it, the need for its services, for its products, will increase massively, especially, for example, with the arrival of AI, right?
Oh yeah, once AI gets here and they have quantum computing, you're going to need a quantum computing resistant identity and access management, right? And we have that. And right now, the most powerful computers and powerful AIs, in order to be able to decrypt the encryption that we offer, it would take approximately 140 years. If the government or the computing power become double what it is today, and you can divide the years by two, that's 70 years. That's still within our lifetime, potentially yours, but not mine. But it's within. And so let's say it goes up by 4 times or 10 times, then it becomes possible for these quantum computers to be able to decrypt the algorithm on these phones. However, if and when that happens, if and when these computers become that much more powerful, we would essentially increase the bit length of the encryption algorithm, right? So every time computers get faster, we expand the number of bits that we use to encrypt the identity digital certificates, which would now make the computers, it'll take longer to decrypt. Right now, we are on what they call secure hash algorithm 2. There was a secure hash algorithm 1 that was used for some 15, 20 years. And only in recent times, I want to say probably about 3 years ago, they said you need to increase the bit strength from 128 to 256, right? And so as the computer gets more powerful, we would increase it to 512 bits, and then 1024, and then 2048, and so forth.
That's so crazy.
Yeah.
I mean, how is that possible? Okay.
Computers are getting smart, my friend, and they're just going to continue to get smarter. So you just have to keep staying ahead of it.
Impressive. And lastly, what do you think the market is not saying in WidePoint? What do you think the market is pricing WidePoint at a $30 million market cap, while you have 140 million in revenue.
Right. So again, you have to, exclude the $80 million of 140 million in carrier services. So we're looking at 60 million in higher margin revenue. So even if we only counted the 60 million, we would still be, undervalued in my opinion. I think the big disconnect is, one, carrier services. We have already talked about that. And two, I think we are what we call a show me stock. The previous management team, now, pre-2017 has, told our customers, told our investors that, we're going to be on every device, every single device, and we're going to, every one of these, computers and smartphones and laptops that are rolling off the manufacturer, assembly lines are going to have one of our digital certificates on them. And, I think we oversold it. And I think people, have been disappointed in that. Also, and I think that's a big factor. And I think we're starting to show our customer that we are continuing to grow our business. And we are in growth mode. And when you're in growth mode, you have to invest. You have to invest in, not only your infrastructure, but in your people and so forth. And so I think we're now reaching that inflection point where every new customer that we add on is going to continue to improve our gross margins. And when we do that, when we show our profitability and positive earnings per share, which potentially could happen at the end of this year, beginning of next year, I think people are going to finally say, okay, you showed me that you can do this, and you showed us that you can make money and be profitable. And I think that's when we'll get a fair valuation.
Okay, very interesting. Now, just to confirm the right way of thinking about WidePoint. So you have about 80 million on carrier service, okay? And all the new income that is going to arrive is a high margin revenue, right?
Correct, except for this new, the new recompeted DHS contract. Right, Department of Homeland, which is going to be that $3 billion contract, and out of that, we don't know what the new scope is going to be, because we know that the mobility management piece of it, the scope of that is about in our calculation, we're probably at $1.5 billion because of our current run rate. I know that they're going to grow that a little bit, and maybe it's not 150 million, maybe it's 200 million. But the other $100 million of that, the contract, right now, I think a lot of that is going to be a higher margin non-carrier services. So they could be a fairly big opportunity for us. But I think for the time being, you can consider the $80 million of carrier services continuing to go. The rest of it is going to be non-carrier revenue as we grow.
Okay, so let me see if I understood correctly. There's about 3 billion in revenue from DHS.
Correct.
And half of that will be carrier service, okay? Or not?
I think that would be fair. Yes, I think that's a fair statement.
But the other half will be high margin revenue.
Correct. So yes and no. So yes, we don't know there's an unknown piece of this CWMS. I think it's higher margin. I believe it is. So let's say you take 200 million for managed mobility, and then there's 100 million that is going to be solution generation, the new mobility. One of the things that's going to be coming out of the Department of Homeland Security is being able to secure the border and to be able to provide infrastructure support, wireless, cellular, satellite support for securing the southern border and securing the northern border of the United States. And so a lot of that is going to be, I believe, to be higher margin. So let's say that's 100 million. The other 200 million of that, about 150, as you say, is going to be carrier services, and about 50 to 60 million is going to be higher margin stuff. Okay, so yeah, I guess we get to the same place with different math, but yeah, about 150 being low margin, the other 150 being higher margin.
Okay, great. Jin,
1.5, I mean 1.5 million billion. Sorry.
okay. Uh, is there anything you would like to add? Because I'm out of questions.
Yeah. So I think the last thing that I would add is, just follow us as we continue to improve. And I think that, we are a good value play. And as this CWMS contract gets higher profile from, our federal government contracting community, I think that they'll take notice of this. I think that there's going to be a lot of players coming in to vie for this business. I think we are in the best position to win. As you pointed out earlier, I think just to get access to our customers, we could potentially be an acquisition target for sure. But we are not looking to sell at fire sale rates. Right? We believe our company is worth a lot more. I certainly believe so. And we're going to do the best we can for our shareholders, and we're going to be good fiduciaries. And I think that there'll be a lot of interest in WidePoint in probably towards the end of this year as the recompete is completed. Right now, it's scheduled to be somewhere between beginning of December, end of November.
Okay. You just mentioned an acquisition. Let me ask that. Have you already received some proposals, some
Yeah. I mean, we have. We have received, some interest from, suitors, but I don't consider them very serious because they look at our market cap and they look at our say, $30 million. We can pay, a premium of 25, 30, 40% on top of that, maybe even 50. That's kind of how they look at it when they come to talk to us, and we're not interested in that because we feel that we're worth a lot more than that, because just as you say, just our customer base is worth a lot more. And then of course our IP, our FedRAMP authorized status, our multi-factor authentication solutions. These are big ticket items that they need to be considering. And so as we continue to improve our financial performance, I think we'll get the fair valuation. And I know that's a long answer to a short question. The answer is yes, we have received some interest, but not serious.
Okay, Jin. Well, I'm out of questions. Thank you so much for your time, for your interview.
Thank you, Victor. I really appreciate your time and your interest, and just keep following us. Hope you and your investor base will find it beneficial. But I think, like I said, we have a lot of room to grow here.
Okay, so thank you so much again, and well, see you next time.
Okay, thank you. All right, thank you, Victor. Take care.
Take
Bye-bye.
care.